NIO stock continues to fall and has hit another 52-week low, but is this a buying opportunity or should this be a warning sign and time to sell? In this video I will analyse NIO stock and give you my thoughts on what is happening right now and whether this is a time to buy or sell NIO stock. What's up guys and welcome back to the channel. NIO stock has dropped and I will explain why this has happened and why NIO could bounce back stronger. Later in this video I will explain exactly what price I expect NIO stock to hit before the reversal starts. I expect this in the coming days, so keep watching until the end and let me know if you agree or disagree with my analysis in the comment section below. I will try to answer the most important question: when is the best time to buy NIO stock? Before we get into the video, I want to thank all you guys who have watched my recent videos from January. After taking such a long break from YouTube, it was good to hear from so many of you and it really does mean a lot to me. Smashing the thumbs up costs nothing, but it really helps the channel out. And it shows me that you want to see more NIO analysis videos. Can we get another 300 likes on this video? Please try to help make that happen. And subscribe to the channel if you're new. I will be doing regular stock videos again for the rest of the year. Finally, I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get into it. Will NIO be a $1 trillion stock by 2050? The Chinese underdog faces an uphill battle over the next few decades. So NIO is actually down more than 34% since the beginning of January, and the share price is at its lowest for almost 4 years. So I suppose the major question is, how much more will NIO stock drop, or have we finally reached the bottom? For context, NIO sells a wide range of electric vehicles and its cheapest model starts around $46,000. It started delivering in 2018 and its deliveries have grown at an impressive rate over the following 5 years. However, NIO's deliveries decelerated in 2023 as it grappled with supply chain constraints and macro headwinds, and the ongoing price war in China's EV market. All of this pressure has reduced its vehicle margins from a peak of 20% to just 11% in the third quarter of 2023. Despite this, NIO continued to expand its network battery swapping stations. After all, this is the unique design that differentiates NIO from all of its competitors. But the high cost of building its battery swap networks caused it to rack up steep operating losses, which now threaten the future of the company. Or does it? Do these losses really impact NIO at all? After all, this company has been heavily backed by the Chinese governments, amongst others, both currently and in the past, and it looks like this support will continue. Perhaps this is even the reason why NIO continues to spend despite losses continuing to mount up. Now this article started with a very simple question: will NIO be a $1 trillion stock by 2050? Now in the past few days we have seen Meta stock make huge gains, like Facebook stock gained over 20% on Friday, taking the company's valuation up to over $1.2 trillion. Now obviously Meta is one of the world's biggest companies, so for NIO to gain a valuation anywhere close to this seems incredibly unlikely. This article looks at the mathematical path towards $1 billion, but it simply involves annual growth rates of 12% every year for the next 26 years, and this does seem unlikely when considering a few factors. I will look at a NIO analysis in a moment, but first looking at market beat, we can see that NIO stock is currently at the bottom of its 50-day range and 52-week range, and the market cap is now just $9.5 billion. So as we can see here, that ranks NIO as the 6th largest EV brand in the world by market cap, with Tesla being number 1. Now just in case you guys don't know the number 2 here, BYD might be number 2 by market cap, but in terms of sales and deliveries, they have recently overtaken Tesla, and they are trading at only about 10% of Tesla's share price, despite having more than 80% of their revenue. If you would like to see me do a BYD analysis video, or maybe a comparison between NIO and BYD, then drop a comment below. Anyways, this video is about NIO. NIO does have the backing of major institutional investors who own more than 26% of NIO stock currently, including the likes of Baillie Gifford, State Street and BlackRock. Of the most recent price targets, only 2 of these have been set since the turn of the year, and as we've already seen, the stock price has tumbled nearly 30% since the beginning of January. But the 3 most recent price targets are between $14 and $16. Before I look at the charts, I want to take a quick look at this. NIO, the EV slump won't last. NIO has seen its stock slump Despite record production and signs of further growth in 2024, the company set record-breaking deliveries in Q4. Now, NIO plans to expand production into sub-brands to enter the lower-cost vehicle market and estimates it controls over 40% of the ultra-premium market. The stock only trades slightly above 1x sales despite all the growth opportunities, which really is quite an incredible. So I'm skipping down here to the important focus on margin. There is a link to this article in the description for anyone who wants to read it. Now, a big aspect of the Q3 23 quarter reported in early December was an updated look at the financials. The company finally boosted vehicle production to new record levels, but also NIO focused on cutting costs to get the EV business closer to sustainable cash flows. NIO reported record sales of $2.6 billion in the quarter and boosted vehicle margins back to 11% on $2.4 billion in sales. The biggest issue facing NIO is the huge deficit that exists between the gross profit just topping $200 million and the operating expense base, even after a 10% cut in operating expenses. Now, NIO needs $4 billion in quarterly revenues with a 20% vehicle margin in order to cover the current operating expense base, even if quarterly expenses were actually cut to below $750 million. Now, importantly, on the earnings call, the CFO guided for a Q4 23 vehicle margin of 15%, with a 2024 target in the range of 15 to 18%. Anything closer to 20% will set the company to head towards the break-even level, though the company will need substantial vehicle sales growth while maintaining the higher margins on the sub-brand vehicle sales. Now, keep in mind that NIO is releasing a new model in March, and vehicle sales will probably be weak during Q1, with the 2023 model prices apparently being slashed and other consumers waiting for the new model. NIO ended September 2023 with a cash balance of $6.2 billion and closed the equity investment from CNEVpost during December, providing another cash infusion of $2.2 billion. The investment vehicle, based in Abu Dhabi, will own 20% of NIO after acquiring 294 million additional shares at $7.50 per share. Now, thinking about this, they invested in NIO at a share price that is nearly 50% above the current share price. They obviously see the potential, and they obviously think that this was a good price, or else they would not have invested at this price. Now, the key takeaway here is that NIO is slowly building a strong brand in the EV market. The Chinese economy and the overall EV weakness have hit the stock, but the company has a solid plan for cutting losses to more sustainable levels to allow for massive plans for a new brand development, along with charging swapping station network to reach fruition. NIO needs to eliminate the losses. The stock will be far more appealing with a large cash balance and more secure from being burned away from ongoing massive operating losses. And this finishes with, investors should use the ongoing weakness to snap up NIO stock. So what do you think? Is this a buying opportunity, or will NIO stock continue to fall? Drop a comment below. Now, taking a look at the charts, if we were to zoom out over the past 5 years, we would see that NIO's current stock price has dropped to a level that has not been seen since 2020. In fact, the last time the stock was this low was during that run from early 2020, when the stock went from $2 up to $60 in January 21. But over the past few weeks, NIO has broken a few levels of support. But I expect NIO to hold the current 550 level. However, if it does not, if NIO continues to drop, then it could drop as low as $4.50. Now, from a charting point of view, I don't think this will happen. I think that NIO stock will likely bounce up and settle somewhere between $7 and $8. Now, I consider this to be very possible when looking at the data. Like, if the stock was to rise from $5.50 up to $8, that would be a 50% gain. Yet despite this gain, the stock would still be well below the price at the beginning of the year and nearly 50% below the price of 6 months ago. But with NIO, there are other factors that need to be accounted for too. Obviously, NIO is an EV company, and a lot of these companies have been seeing fierce competition over the past few months and a general decline in sentiment towards EV. And especially over the past few weeks with the cold weather, there's been lots of stories of problems with battery capacity and charging issues with EVs around the world in places that have seen severe temperature drops. But also, there is an overall Chinese market conditions which have played a huge part. China's Shanghai Composite plummets to a 4-year trading low. Now, this is an article on Seeking Alpha, but if you want to have a quick read of this, then I've also put a link to this in the description below. Also, check out the first link in the description below. If you are not already signed up to Seeking Alpha, you can sign up using my link and get up to 50% off your yearly subscription. At the moment, Seeking Alpha are giving a free 7-day trial, so check this out. If you don't like it, then cancel it within 7 days at no cost. Personally, I love the number of articles that are on here, which gives a lot of different perspectives on stocks. Like even looking at NIO, there's about 10 new articles written on NIO stock over the past 10 days, all from different analysts looking at different points of view, different perspectives, lots of different ideas, and lots of different views on how this is going to play out over the coming months. Check out Seeking Alpha using the link below. Anyways, the broader Chinese stock market fell to a new 4-year low. The Chinese stock market continues to feel the downward pressure, with news breaking that the nation's largest brokerage has suspended short selling for specific clients in an attempt to prevent an accelerating decline. CITIC Securities has halted the lending of stocks to market players and increased its requirements for institutional clients this week, according to Bloomberg. The index is down by 14.3% over the past 6 months, 20% over the past year, and now trades at the lowest level since January 2019. So obviously this has been very concerning for Chinese stocks, and I'm sure that if any of you have exposure to many Chinese stocks, then you will have felt the effects of this. And we can see some of China's popular stocks highlighted here, with NIO being top of the list with the biggest drop. Also, another one listed here is Alibaba, which now trades below its initial IPO price from nearly a decade ago. If you would like to see a video on Baba stock, then drop a comment below. I feel that this is one of the most underrated and undervalued stocks in the world right now. The only question is, how much more will this drop, or has this hit bottom? But Crane Shares, the ETF issuer of the popular Crane Shares CSI China Internet EFT, stated in 2024 China Outlook report that we believe the recovery should broaden and accelerate, while stimulus measures implemented in 2023 may begin to have a positive impact on the economy and the stock market. So this highlights to me that we might be very near the bottom for several Chinese stocks. Let me know your thoughts in the comment section below. If you've watched all the way through the video and enjoy my content, then please hit the like button. It really helps the channel out a lot. If you're new, hit the subscribe button and bell notification, and follow me on Twitter if you would like to see another NIO update soon. Let me know if you would like to see a video speaking more detail about the upcoming earnings report and about what we can expect from this and what to expect in Q1 and Q2 of 2024. Nothing in my videos is financial advice in any way. I'm not a financial advisor. Thanks for watching, and I'll catch you in the next update.